Hi, I'm David.
And I'm Melissa.
And we're your neighborhood realtors.
We're your neighbors here in Southeast Fresno.
We also happen to be realtors who specialize in Southeast Fresno.
With 2017 drawing to a close, we wanted to give you an updated value on your home for the fourth quarter of 2017. So if you check out the slides down below, we broke down the size and general price range for each home in our area.
Now, this being the last quarter of the year, I wanted to do the video a little bit different, and I wanted to break down certain trends that we noticed throughout the year, explain them, give pros and cons to both or several of them, as well as set guidelines moving into next year. And by what I mean by guidelines is certain price brackets for each size home that should be the minimum price a home should be listed for in our neighborhood.
So as we roll into 2018, there are two major things that either have or could possibly affect the real estate market moving forward. One is FHA home loans. So the maximum price for an FHA home loan was $292,500 until recently when it was up to $305,000. So what does that mean? Essentially, these buyers, which are a huge chunk of the buying market right now, have an additional $12,500 worth of purchasing power. Now, why does this matter to you? Of the 90 transactions that happened in this area last year, which are the three neighborhoods that feed into John Walsh Elementary, only 12 of the 90 would not have qualified for an FHA home loan. So essentially, more purchasing power for the buyers in this area is a win for all of us.
Yes, and which is going to result in a steady increase in pricing over the course of the next year. So, yay! That being said, I hope you enjoyed the video and happy holidays.
Thanks!
See you next year. 2017 year-end recap. As we've done in the past, I'm going to break it down into 3 separate groups just to give you a ballpark idea of what each size range is doing. First group being homes up to 2,000 square feet. Now, quarter over quarter, we saw strong growth throughout the entire year. We started back in quarter one at $245,000. We're hovering right around the 250, trying to break through it. In quarter two, we broke through it and broke through it strong. We climbed all the way up to 258,000. Quarter three, we had a modest gain of 2,000 up to 260,000. Quarter four, we had another modest gain up to 266,000. And the pending sales on the market today, we are averaging $278,000. Now, those pending sales are perfect for predicting what's going to happen in the next year or the next quarter, because they are currently in escrow with accepted offers, so we can predict what properties are going to be selling for moving forward. Based off of this, no home in our neighborhood should be listed for less than $250,000. There's good, strong evidence that the smallest of the small homes should be starting at $250,000, and we'll break into that a little bit more in detail here in a few minutes. Now, the next size range is the 2,000 to 2,400 square foot homes. Now, you'll see right off the bat that this did not see the same growth as the other ones. This size range jumped back and forth, some low sales, some high sales, and stayed pretty much the same throughout the entire year. We did start seeing some growth towards the end of the year, and we have growth moving into the next pending sales. And this size range is going to increase along with FHA price range, which has gone up from $292,000 up to $305,000. So it's a good sign for this, and this size range should be starting at $290,000 moving into 2018. Now, the final one, this one is a little bit more scary, because you'll notice early on in the year we started at $305,000 for the biggest of the big homes in our neighborhood. In quarter two, we jumped all the way up to $340,000, which was phenomenal. Now, that growth was a little bit more than the market could handle, and we had a bit of a correction. We dropped down to about $317,000. For the most part, we're trying to break through the $325,000 price range. However, we gained momentum going down going into the fourth quarter and had some bad sales. And the average sales price for quarter four was $299,000, so less than where we started off in the year. And based on what the other two size brackets did, That is not the norm. This is actually well below average for the entire area. In fact, if we eliminate the properties in our neighborhood, just the active properties on the market today, the cheapest one on the market in our zip code that was built within the last 30 years is $320,000. So $20,000 more than what the average was last quarter. To dig a little deeper, properties that are pending in the last month or so, and properties that accepted offers that are projected to be closing in the next coming quarter, the cheapest property that went pending was $319,000. So again, $20,000 more than where we were at last quarter. And to top it off, all of last quarter in our zip code, with the exception of the properties sold in our neighborhood, the cheapest property sold was $314,000. So one of two things is going on here. Either those sales were a fluke, or we have the least desirable neighborhood in our entire zip code. I know for a fact that's not the case. In fact, we are one of the more desirable ones, and this needs to be changed. So based off of that, no home in our neighborhood should be listed for less than $320,000 if you are living in a property that is 2,400 square feet or bigger. Now I want to go over a couple of real estate myth understandings. The first one is listing your home for what it's worth. So your list price should be what your home's worth. That is a real estate myth understanding. The second one is a price change costs you money. List price equals what your home is worth. That is wrong. List price does not equal what your home is worth. This time of year, this type of market we're in right now is a perfect opportunity to go over this. Typical markets, if your home is worth $250,000, your list price may be in your best interest to go to $45,000 to create a bit of a rush to drive buyers to it. However, the current market we're in, that is not the case. And a prime example of this is one of the more affordable homes in our neighborhood right now is a 1,445 square foot Centex model. This property today is worth anywhere from $240,000 to $245,000. Now, this size or this price range, however, is not the best price range to be in right now. If you look at the screen here, you'll notice properties in this price range the last 3 months have sold on average 22 days, which is that's a good number. However, if we're looking into the future and trying to predict what this price range is going to be doing moving forward, you'll notice the pending properties are on the market for an average of 49 days. In fact, not one property with an accepted offer accepted within the first week of being on the market. That is ridiculous. That is unheard of in this type of market. We have a huge property shortage, and not a single property in this price range received an offer in the first week. Now, if we take a look at the next step up in the price range, the $250,000 to $275,000 price range, you'll notice the last 3 months, the sales average is 19 days, a little bit better. But what's more staggering is the pending days on market. So the properties that recently accepted an offer on average in 18 days. In fact, 60% accepted an offer in the first week, 90% within the first 2 weeks. Now, this property is not worth $250,000. That being said, if we list this property at what it's a little bit above what it's worth, it's going to give it a better chance of selling. And we know right off the bat that properties listed at $250,000 or higher receive an offer 60% of the time within the first week, 90% of the time within 2 weeks. So after 2 weeks, if an offer is still not accepted because it is overvalued or overpriced, then we make a change. And this is where we lead into myth understanding number 2. Price changes cost you money. Wrong again. Price changes do not cost you money. What a price change does is create attention to a property. So the first weekend your property's on the market, everybody sees it. Everybody goes in, sees it in their portal, gets emails about it, and wants to go view the property. After that first, maybe second weekend, the only people viewing your property are the new buyers. The one that is just coming to the market, and they're seeing your property along with every other property on the market. So there's nothing special about your property. It's one or two buyers looking at every property on the market, what's going to make yours stand out. So a price change is simply throwing your hands up in the air and say, hey, look at me. Hey, I'm over here. It's just a refresher. It gets your property back in front of the buyers who may have already seen it and forgot about it, or they went and looked at another property and missed out on it. It's a refresher. And the strategy with this, and this is something you do with your agent before you start, is you want to create a new rush for your property, similar to what Black Friday does for retail. All they're doing is making slight price changes, and they create a huge rush for that one day of sales. And everybody wants to go see the new property, because when that email comes out with the price change, it's just like a new property. Everybody sees it again and views it again and wants to go see it and put in offers. So the key to making a good price change is set up a game plan ahead of time. So before the property even hits the market, have an understanding of, okay, after 2 weeks, what should we do if the property doesn't sell? So for example, this property that we're talking about, this 1,445 square foot property, we know it's worth $240,000 to $245,000. But listing it at $250,000 is going to give us a better chance at getting it in front of the active buyers that are currently buying today. And we know after 2 weeks, if the property is still around, something needs to change. So we set up a game plan to adjust it. Now we also know if we started at $240,000, $245,000, that property is going to sit for at least 2 weeks before it accepts an offer. On average, it sits for another 49 days. So you haven't lost anything. It's not costing you money to drop the price or make some type of change to regain attention. Now here's an example of how a game plan can impact you one way or the other. Way back in September, or 3 months ago, 3 properties hit the market the same exact week as each other, all in our neighborhood. The first property was 1,629 square feet, and it hit the market a little below market value at the time of $255,000. Second property was a little bit bigger at 1,703 square feet, and it hit the market just a smidge over market value at the time of $274,900. And then the third property, which was in an entire different size bracket, which was 2,153 square feet, hit the market at $275,000. Now we know between $250,000 and $275,000, that's the same search bracket that a buyer is going to be in. So all 3 of these properties were viewed by every buyer active in that price range at the same time. All 3 of these properties had open houses the same weekend. So most likely, these 3 properties were all seen by the same buyer at the same time. They went to one, they went to the next one, they went to the next one. When it was all said and done, the bigger property received multiple offers. The smallest property received multiple offers. And the property in the middle that was priced a little bit out of the ordinary compared to the other 2 didn't. In fact, the smallest property was on the market for an entire 3 days before accepting an offer. The biggest property lasted 1 whole day before accepting an offer. And the middle property lasted well over 2 months before finally accepting an offer, and as of this recording is still pending. Now what happened here with this middle property is they did not have a game plan going in. And because they didn't have a game plan going in, it cost them 2 to 3 months before receiving an offer and be able to close. And 2 things could have changed this scenario entirely. So this property, the 1,703 square foot home, while it sat around waiting and doing nothing over the 2.5 months, 203 other properties in this price range accepted offers and sold. 203 missed opportunities. And again, this property sat and did nothing. They didn't change their price. They didn't adjust. They did absolutely nothing to get this property back in front of buyers. And we know 203 other buyers bought properties in the same time frame. So a simple price change, whether it was raising it $100 or dropping it $100 or anything, would have refreshed it, got it back in front of potential buyers, and got people in the door, made them fall in love with it, and one of those 203 other buyers could have written an offer and closed before it finally did receive one. Now, what did that cost this seller? Now, we know right off the bat that this size range actually saw an $18,000 increase in value from the time it hit the market to today. Now, most likely this seller is not going to be buying something in the same size range again. They're probably going to be moving up. Now, we know that our fourth quarter and the step up in our neighborhood actually was a bad time of year. Average sales price was $299,000. So if they would have sold early on and was able to buy one of those homes for the average price of $299,000, we know right off the bat, based off of what the market's doing, that home is worth at least $20,000 more than what they would have been able to buy it for. What's $20,000 equal to? That's about $150 on your mortgage payment. Now, what's $150 mean to you? So, does it cost you money to make a price change? Cost you money to not make one?
So thanks for watching. Say bye, David.
Bye.
Say bye, Oatmeal.
I'm David.
And I'm Melissa.
And you're...
And you're you.
You're you.
Sorry, I think I'm hilarious.
I need caffeine. Are you ready?
Whoa. Oops. I did it again. That one was recording.
Oops, I did it again.